Hi everyone, I'm PPE and this is the Peso Pro episodes where we talk about money management tips and peso tricks. UITFs or Unit Investment Trust Funds are simply a pool of different investments pulled together by different investors. Taken another way, think about it as a basket of different kinds of goods. You probably have different kinds of grocery items in that basket. Right? You probably have soap or bread or fish, and all of these kinds of things come together as your collective grocery basket. UITFs have the same basket concept, but they have different investments within them. They are managed by banks or trust corporations who have professional fund managers who take care of your investments on your behalf. There are different types of UITFs, and it's important to understand what types of UITFs you're investing in because the underlying asset within that basket, kung ano yung laman ng basket na yun, will most definitely be affecting the returns that you will get from that UITF. Let's take the first example of the money market fund. A money market fund typically invests in time deposits or certificates of deposit. So think about it. Basket na may laman na paiba-ibang mga time deposit in them. Without you having to go to the bank, once you invest in this fund, you're essentially buying pieces of different kinds of time deposits or similar instruments into that same fund. So pag nag-issue na ng interest payments, yung time deposit na yun, then you actually earn money as a participant of the total fund. Now you can imagine, time deposits are roughly safe, and in a lot of cases, they're even insured. So time deposits, because they're very conservative and safe, they also tend to give you a very low or very decent kind of return, typically around the 1 to 3% per annum range. Another type, which is in the moderate kind of risk profile, are bond UITFs. Bond UITFs, as the name suggests, invest in corporate or government bonds or notes. So technically, bonds are debt instruments. So, utang ng isang company or the government from you. So, if the government issues treasury bonds, what they will do is say, okay, Juan, gusto ko ng 10 billion pesos, magkano ang bag mo? And if you invested 50,000 in a treasury bond, then essentially, you've lent the government 50,000 pesos, of which you can expect interest payments to be paid based on the terms of that specific bond offer. A bond fund invest in multiple kinds of bonds. Treasury, meaning government bonds, or corporate, meaning companies issuing the same debt certificates, and pool that together para kung mag-issue na ng mga interest yun, or if the bonds go up in value, if you bought into the fund, then you can actually enjoy the benefits of both the interest payments and the capital appreciation of that bond. Another type would be stock or equity funds, which I think is the most common. Stock or equity funds can be different kinds of mix of different stocks. When we talk about equities, we talk about them being 100% stocks. Meaning, in your basket, lahat ng to will have a combination of different companies depending kung ano yung strategy of the fund. But all of these are shares or stocks of those companies. Yung mga pinaka-common are index funds, which means may follow siya na set of representative companies already. The most common one will be the Philippine Stock Exchange Index or the PSEI. Pag sinabi natin index fund siya that follows the PSE, it means that it follows the top 30 companies making up the index of the PSE, and it just mirrors what the market does. Also, stock funds or equity funds can be managed funds, meaning may specific na strategy yung fund manager, like for example, investing in certain industries like technology or consumer or Catholic values, depending kung ano yung gusto nilang strategy of that fund, they can invest and select different kind of companies that fall within that strategy. So in technology, you can probably think about a few tech companies here and there. Or if this is a fund that invests in, say, real estate, then you can probably expect Ayala Land, Mega World, and the likes to be in that fund. There are very many different kinds of funds depending on the overall strategy, and there are a lot of banks or trust corporations that actually offer these. The last type of UITFs are a mixture of the first three. So the name of this is a balanced fund, which just means it's a combination of bonds, equities, and sometimes they even put in time deposits or certificates of deposit also into the mix. It is up to the fund manager to decide this for you. You don't have to think about the mix, which is the great way if you are not the savvy investor and you don't want to get into the technical details of each of those different kinds of investments. Before we go into practical do's and don'ts, I want you to remind yourself of the concept of the basket. Understanding what's inside the basket of the fund that you chose will help you determine if this is the right fund for you. Maraming akong nakikitang mga tanong in groups asking, saan po ba yung mas maganda ditong pag-investan? Or alin po ba dapat yung paglagyan ko ng pera? Yung ito bang fund na to or itong fund na to? And I understand if you are new to the whole investing game, all of these can be very confusing because they all have very, very long names and you may not actually be able to understand all of them. But don't fear because all of these can be learned and you actually have very good, readily available, and regulatorily mandated kinds of information that you have access to so that you can have a bird's eye view of what you're getting yourself into. There are a few important things to note, especially when you're investing in funds. Largely, three big things, and this list is not perfect, but at least at a minimum, you have to understand the three things. Number one is who is the fund manager because that affects the overall credibility of the fund. All of these accredited trust or banks that are allowed by the SEC to actually offer these kinds of instruments are registered and they have to have a specific license to do so. So you can check this in the government website to double check that they are legit. The second thing that you have to learn will be what kinds of investments is the fund putting money in. So again, think about that basket, understand what is inside that basket so that you can sort of form a better understanding of what you're getting yourself into. The third one that you have to understand at the minimum will be fees, because at some cases you will have fees that go all the way to 2.5 to 3%, which will eat into your profits later on. For newbie investors in funds, one of the most common concepts that I think people fail to grasp is, how do I actually earn money from a UITF? Is it the same as stock trading? Is it the same as maybe something like a Pag-ibig MP2? In UITFs, essentially you earn in 2 or 3 ways depending on the type of UITF that you bought into. The most common one would be the appreciation of the stock price, which means na pag tumaas yung mga stocks na pinag-investan mo doon in the basket, tumaas yung value ng share mo in that fund. UITFs are unit investment trust. So units because essentially when you buy into the fund, you buy units of the fund. So for example, if you buy 1 unit at 100 pesos, if maybe after a certain point in time, the stocks within that basket na binili mo became an aggregated value of 120, pag binenta mo yun, then you pocket the 20 peso gain less any fees and taxes. The second way that you can earn from UITF is through dividends. And if those stocks issue dividends, then all of you who participate into that fund will get a fair share depending on what you invested into the fund. So remember, these are the same stocks, they're just placed in a basket. So kung ano yung dividends na earn ng basket na yun, may share ka rin dun. The third way to earn in UITFs is actually more applicable to bonds or maybe if you have a balanced fund. Once the bonds pay interest, then again, similar to dividends, because the bonds are all within the same basket, you also participate in the interest earnings of that same basket, proportionate to the investment that you made. Now, one thing to understand is that in UITFs, all of these gains and losses that you see on charts or like on daily NAVPU reports, all of those are actually paper gains or losses. What do I mean? While you see them on paper or maybe in a digital screen that you're staring at, these gains or losses aren't actually realized, meaning hindi siya talagang totoo up until you sell the units that you have in that fund. Let's say you bought 1 unit at 100 pesos. So may 100 pesos ka dyan ngayon. Next 2 months or 3 months, that value became 120. So technically, nag-gain ka ng 20%. If you did not sell at that certain point in time, then that gain is called a paper gain, or in an accounting speak, unrealized gain. Kasi nandyan lang siya sa loob and it's still subject to fluctuation. Now, let's say 3-4 months down the road, nagka-COVID and there's a lockdown and prices fell on the stocks. So ngayon, yung dating 120 when you last check it, now became only 90 pesos, for example. Since 100 yung pinasok mo at the start, now 90 na lang ang value, you actually have a 10 peso loss. Again, it's still the same unrealized or paper loss because up until nandyan siya, it still can fluctuate. Which means that you are not advised to actually look at your UITFs on a day-to-day basis because all of these fluctuations can really be expected, especially if you are investing in equity funds. The best way to look at it is essentially on a long-term scale and try to make as much contributions as you can because nothing beats time in the market versus timing the market itself. Remember, no one really knows when the prices will rise and fall. But, just to illustrate, if that happened to you, you can only technically realize the gain or loss when you actually sell at a certain price point. So hanggang nandyan yung fund na ininvest nyo and whatever the value is, that can still change and your gains or losses are not real actual gains or losses until naglagay ka ng sell order at na-execute yung sell order na yun. Meaning, binenta mo na yung unit mo in the UITF for whatever is the price as of that point in time. So, kung binenta mo yun at 90, then technically, natalo ka talaga ng 10. But if binenta mo siya nung 120 pa siya, then technically, kumita ka ng 20. If you didn't do any of the selling, then all of that is for information purposes only and shouldn't be counted as realized gain or loss. UITFs are great because for the average investor who doesn't have time to actually learn stocks or doesn't have the capacity to actually try to monitor and learn market dynamics, it's a great way to earn passive income. You can invest for as low as 50 pesos on a domestic fund using GInvest. I'll link to a video right here and you can check that out right after this video because there you also have a few fund choices managed by Atram. It's also a good way for you to instantly diversify because remember, once you put money into the UITF, you are buying a basket of different investment. You're not investing in one thing. You're already auto-diversifying your investment. So maybe if one company doesn't do really well and if the others do well, then your average may still come back with a good return. One of the other pros is that there is actually a professional fund manager who manages the fund for you. You don't have to worry yourself about the choices on day-to-day trades or decisions on what to buy or not because a professional fund manager does that for you. Some of the downsides though will be that your returns will vary based on the basket of investments that you chose, and the higher the risk, the higher the potential gains or losses are. You also will not be insured by the PDIC similar to banks, and you're actually subjecting yourself to potential losses. There's also some lag in the time when you actually execute a sell order and the actual fulfillment of that order. Meaning, pwede na tinrigger mo siya ngayon, but depending on the fund that you chose, it may take a few working days for them to actually successfully trigger the sell order. So, pwedeng may time lag between the price that you thought and you may have to settle with another price because of the time difference. Or, you may need to wait to get funds because in some cases, especially for feeder funds, it may take to up until about 2 weeks for you to actually get that asset liquidated into cash. As in all things investment-related, UITFs have their own pros and cons. They can be great if you don't want or don't have the time to actually learn about investing on your own and would prefer a professional fund manager to manage your money. It's It's also a great way now because technically you can start for very little amount and learn the ropes and try to build wealth over time. They're very good vehicles for long-term investing because these are not similar to trading stocks where you try to profit off fluctuations within the day. UITFs are designed to be great for long-term investments so that you can ride the ups and downs of the market. The trick is to contribute consistently and maximize your time in the market so that you get the best possible return for the investments that you put in. I hope this was helpful for you to understand UITFs better. And now if you're ready to start investing, these videos will be able to help guide you through different kinds of investment choices, and you can also learn about GInvest and Seedbox because these two are great platforms that you can start very easily. They have funds managed by Atram Trust. And if you want to learn more about that, you can head to the links in the description box below or click these two videos so that you will be able to learn more and start investing for yourself. If this video was helpful, I'd appreciate if you can like it and if you can subscribe to the channel. It's free, but it really does help a lot. You can also hit the notification bell so that you're notified when new videos are up. So go ahead, click on these videos and I'll see you there as well.